I put a tweet out yesterday. I've been trading Fed meetings for many years, and day one's always the overreaction. Day two is the reaction to day one. Day three, we find out really what everyone digested, what the Fed did, and what we think the future path of the market could be, because that's what it's all about, right?
Welcome back to NinjaTrader Live. I'll be your host, Tom Schneider, along with Anthony Crudele. Develop Your Edge. How you doing, Anthony?
Good, Tom. Looking at the markets, a lot to talk about.
Yeah, for sure. You can't help but not look at the markets today, yesterday. But I was thinking of you yesterday because you have a great way of looking at the Fed. I think your assessment is really, really intelligent.
I put a tweet out yesterday. I've been trading Fed meetings for many years, and day one's always the overreaction. Day two is the reaction to day one. Day three, we find out really what everyone digested, what the Fed did, and what we think the future path of the market could be, because that's what it's all about, right? I mean, everyone gets so focused in on the macro side of it. I'm not a macro trader, but obviously it has a massive impact. Look what we've seen the last couple of days. And so yesterday was pretty muted response. I mean, I know the close got a little busy. I mean, a little bit of a sell-off. And then what you saw what happened overnight. I think my initial thought was when I woke up this morning and I saw that we were up that much, the market's really taking in the fact that the path of rate cuts is now happening. It's not that we all didn't know this anyway. I mean, the market is priced in so much of this beforehand anyway. One of the most interesting things that I took pretty much maybe later in the evening from the meeting was, number one, Powell, he just looked, I don't know, he didn't look his same self. So I was kind of like, that's kind of, I don't know, I was listening to it and I'm like, man, he doesn't seem as confident. Not that I read the tea leaves that means much of anything, but the next thing was looking at the future path of cuts, how they think there's going to be a full basis point between now and the end of the year. Well, I mean, it's September. We just did 50. So telling you that the next two meetings, there's going to be at least 25 basis points cut per meeting. And then you looked at next year, I think is another full point. Basically, they're unwinding this hiking so fast that it's one of those things where we're right back into this cutting cycle. We went right from a hiking cycle to we're going to watch the data. We're going to wait to all of a sudden, we're cutting rates. I mean, and I think that the market looks at that from the perspective of, well, we're in this cutting cycle again. And I think psychologically, people believe that that's going to be very bullish for the market, obviously, because we're up so much today. Overall, I think that the tone is just settling in with that. And therefore, you have a technical breakout. You're seeing here in the S&P coming off of rollover. Nasdaq's not quite there yet, but you got technicals with the Dow also coinciding with this. You got the Russell catch-up trade now, where most people will say that the Russell, it's going to always benefit the most from rates getting cut, but they don't really benefit until the cutting starts to happen.
Yes.
And so this morning in my note, I wrote that I think the Russell is really the play now because it shows that the Fed is going to be in a cutting cycle. They're coming and they're not looking at the data as much. They're like basically telling us that's what's going to happen. We know this all could change, but ultimately I feel like the Russell is going to play massive catch-up trade. And so I'm just waiting to see what options expiration does tomorrow. I think after that, we really have a clear path between now and the end of the year. I think the election becomes less of an event now in the market. The Fed cutting cycle, I think, becomes more of a primary issue. The market's changed. The environment's changed once again.
I kind of noticed this too. Garland wasn't his usual self. And I kind of attributed to that to the fact that not only you're initiating this rate cutting cycle, which I don't know if he's ever done or if he has, it was 5 years ago. And, the pressure of that, right? Because it wasn't just that he was initiating it. There were calls for 25, 50, and then a letter from some senators saying 75 is appropriate. So the pressure to do the right thing is probably more than just saying, yeah, we're going to keep rates flat. We're not going to do any changes. So I think there was some of that. And it also gets off that idea of he can't be political. There's talk about they don't want to appear political. Well, they started the rate cutting cycle. That's off the table now. We know where we're going to go. We're on this ride. So the dynamics have changed. And about the Russell, yeah, we had to wait for this to become an actuality because the small caps can't really start innovating, borrowing money, getting that capital into their system until the rates are lower. We could talk about it all day, knowing the rate cutting is coming, but until it happens, it's kind of like waiting for that cap on the oil well, right? When you take that cap off, the oil comes out. It's kind of the same thing.
No doubt. And I think as traders, we know most everybody listening to this is a short-term trader, whether it's swing trader or intraday scalper. And we say, why does all this matter? Well, it matters because the market environment's changed from a macro perspective. I think more of it is just that, we are in a rate cutting cycle, just coming directly out of a rate hiking cycle. So we went from tightening to loosening really fast. And I think that's really interesting. I'm not an expert on what's happening with the jobs markets and all these other different crosswinds that the macro guys, and gals out there will follow to see what they say about it and what it really means. Because when the Fed starts cutting rates the way that they are, I mean, is it just because of inflation? Is there other things? I mean, so that stuff at the end of the day, it matters, but not to me as much intraday and on a swing basis. My focus is go to the tape, take a look at the charts. Let's do that now. And let's see, where can I benefit? What I see is where the opportunities are. You know, S&P, we had rollover. So we're making higher highs than we were in August. And to me, that's what's really important. When you get into rollover, it's always tough because you have the continuation charts. Do you use them? Do you not? It's one of those things where, you know, I think SPY's making new highs, but then you look at the futures, I think we're just getting there right now. And it's always kind of a tricky thing if you're comparing where we are when you have a rollover with such a wide gap. I'm looking at right now the D's contract. And when I look at it, what's important to me is that we took out the August high. August always makes a weak high or low. August highs and lows are typically weak. We go back and test them. I actually thought at one point after that September move lower that we'd go and test the August low. That's not obviously the case. We took out the August high. And now to me, that sets really the path and the tone for what's next. I mean, so it's very hard as an intraday and short-term trader when I look at the chart right now and I see we're potentially heading into range expansion. And range expansion just means that I think that ranges are going to get wider. And I think that whatever direction we break out in, which is now higher, you know, the velocity of the move is, the probability is definitely to the buy side. And that short-term target is going to be probably right around 6,000 and change for the S&P, which is, I think, very realistic. I mean, I don't think it maybe takes too long to get there. We'll see. But when I go and look at the Dow, very similar as well. And I'm going to get to why I think the Russell's the better play. Eventually, I actually think Dow and Russell are the two best plays right now over S&P and Nasdaq, and I'll explain why. The Dow is already with this Bollinger Band, and it's already getting this move where the Bollinger Bands are opening up. So we went from a period of contraction to now expansion. And now I think the Dow is probably headed to 43.5-ish. Likely to hit there before the S&P. And I think likely that this market hits its target. The S&P target is not as favorable to me because the S&P could easily do one of these things where it goes like 59 and change and then back down to 5,700 and kind of back and forth. Because I think certain sectors will do well and other sectors may not in this environment. But when you look at the Dow, it's telling you from a technical basis, it's the stronger one. So you always want to buy the strong. And when you're looking at indexes versus buying the weak, you don't want to buy the laggard because the laggard already telling you had news and you have a technical breakout that's stronger in this index. This index favors, to me, long setups. So as a short-term trader, I'm not looking to fade this move. I'm only looking at buy setups. You know, I look at my machine and say, if I see a long setup, and I'm snatching those up.
Yeah. What's interesting about that, Anthony, just real quick, both the Dow and the E-mini are making all-time highs, but which one has the most potential, right? Probability for hitting that higher target, and that's the Dow.
I go back to when I started to really learn and understand this. It was really early on, and it took me years to kind of put it into play, is that, you know, I was only an S&P trader. That's really just because I started in the S&P pit and I just kind of just stayed with it. But as I expanded out and with the ability to be able to trade electronically and access to all these tools, and as time goes by, you start looking at it going, you know, when we're in a certain environment where the Dow is leading or the Russell or the Nasdaq, why would I go and just focus on the market that I know will likely be choppier and overtrade it versus the one that has the path of least resistance right now? So I always compare apples to apples. And when you're looking as an index trader, it's extremely important to be long the one that has the higher probability in your favor. Why do I want to try and buy the one that's weaker? It never works that way. It never works well, right? I mean, sometimes you're going to catch a ripper, but overall, if I think the market environment is bullish, I want to buy the strongest one. Sure. And next thing you know, we look at the Russell. So now the Russell gets interesting here because technically you could say it's not really the strongest. It's actually got a lot of upside potential because it's playing catch up. So this is kind of goes against a little bit of what I'm saying, but the macro side of it is where that comes in and will really take hand over the technicals in this situation. Meaning that if the Russell can start to see range expansion with the macro that supports it, it needs to prove more over time. I think it will. So in the near term, it might be bumpy, but if it starts taking out, you know, July highs and it starts getting into range expansion, the Russell, I think, is a trade that can come on really hot and it can come on kind of late. It's one of those things where right now the Russell is probably less favored than the Dow, but it's got the macro backdrop. If the rate cycle continues to see cuts, this is a market that's going to have an underlying bid, unlike the other markets. And it might be a total whipsaw, but you want to be more of a buyer on the dips and not looking to fade this market. As an intraday technical trader, you got to look at it and say, look at, if this thing starts catching a head of steam, very careful fading it. And this is one where you kind of want to grab on as it's going. And so it could be a massive momentum play. And it's similar to what you're kind of seeing in the Dow as well. And when you look at the Nasdaq, man, I just think it's a two-way tape. I mean, I don't really see the Nasdaq as a trade right now. I think the Nasdaq's going to be the toughest one. I don't know that necessarily that the Nasdaq goes and makes new highs. I mean, it may not happen. And as an index trader, this is tough because most everybody's in S&P and Nasdaq. We know when we look at the stats, right? Everybody's trading Nasdaq or S&P. But I just think you really can expand your horizon here. You can look at your strategies and overlay them on these other markets because those markets might be a cleaner trade. That's what you have to take away when you go from one environment to the next, because most of you probably have experienced a period of time where you're like, man, I've been doing everything the same. I've been just keeping my head down, following my short-term strategy, and everything's working really well. And then you get this period where it's like, if you're in the Nasdaq lately, it's maybe you've been doing great. I hope so. But if it's all of a sudden it's just getting roughed up and it's a two-way tape, you kind of say to yourself, why is that the case? And it's really because indexes go through cycles of leadership. And I always want to be long the strong or short the weak. So I want to find the market that's the strongest, and I want to come in intraday and I want to go, right now it's Russell and Dow. I don't trade them a lot, but when I see a long setup, I'm going to take them. And the probability then goes in my favor just a little bit more than it does with S&P and Nasdaq.
Yeah, I think that's great analysis. You look at the charts just from a Bollinger Band point of view, just from a price action point of view, and you don't see the NASDAQ presenting itself. It's okay. If you trade range bound very well, then maybe the NASDAQ is for you. But when you're trying to get a trade that goes with a trend, you're right. Russell might be a macro play, and the Dow might just be, hey, look, it's the strongest one. We've been noticing that with the Dow for a couple months now, that when the market's down, it's just not down as much. And when the market's up, it's one of the leaders.
I mean, no doubt. And I go back to it. When you are a day trader, once you hone your skill on a single market and you're trading the indexes, it's not that big of a leap to go from one index to the other, as long as you know what you're looking at coming into the day. I am not scalping every day. I like to go with the market that has the most potential to reach targets. When you are in a market that's in a two-way tape, like I think S&P and NASDAQ are, at least for now, you can have a lot of volatility intraday, which once again, if that's your style, then stick with it, then you roll with it. But if you're someone who needs to slow it down, you like to find a direction that you want to be in, and you have a strategy that you like, overlay it on one direction on the strongest index. I'm not sitting there trying to beat myself up, getting chopped up in a NASDAQ or S&P if I know it's not the market for me right now. But I will tell you this, keep one eye on rates and keep one eye on gold, because it's a slow riser right now. I will tell you, I've probably struggled in this market more than most, because this market with fake breakouts pulls back in, ends up being a range bound market. And it just is like, now it's this creeper rally. It just continues to chip away at highs. It's just that slow grinder higher reminds me a lot of what you would see in an S&P in a slow bull market, where it looks like this, where it's like ripper higher, sideways, minimal pullback, rally, sideways, maybe a new high comes back in, creates some balance, grinds higher. Bitcoin is another one. I'm not a huge Bitcoin fan, I'll be honest with you, but it gets interesting to me. If you start seeing range expansion up in here, I could see high 70, near 80,000 in Bitcoin. No problem. Oil is actually, to me, is bottoming as well. And I think that when you look at Bitcoin, gold, it's funny, like the beginning of the year, I'm almost only looking at NASDAQ, S&P. Now I don't even really look at NASDAQ and S&P as the better trades right now. I've got Dow up, I've got Russell up, I've got oil up, I've got gold up, and I've got Bitcoin. I allow myself the ability to step into these other markets because I'm a slower paced trader now. So when I see things that are changing in environments and I think markets can find a good direction, I can be really focused in on just those setups. And that's what I'm saying right now. I mean, that's really my overview. I know today we focused on what I see post FOMC, but it's, it's funny. Like to me, S&P and NASDAQ, not the primaries right now. You're looking at these other markets.
Awesome. Anthony, thanks. We've gone a little over, but it's always great to talk to you, and I could do this for a lot longer. Where can people find you? I think they know.
AnthonyCrudele.com or Anthony Crudele on Twitter.
Awesome. Thanks so much, and we'll see you next week.
See you guys next week.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.